And we're on. Good evening, folks. I see people are just joining us, and as normal, we'll wait a couple more minutes to get as many on as we can, and then we will get started. So welcome. Let's give it one more minute, and we'll get started. All right, I think I'll get us started. Hi, everybody. My name is Bob Cohen. I am a SCORE mentor, and I want to welcome everybody here tonight. We've got a pretty interesting workshop. I think you all get a lot out of it. Dave Javeski is with us from Comstar Credit Union, and he's going to talk to you about all things, lending and bank-wise. I think that you'll find quite interesting. If you're out there looking for funding, what Dave's got to present tonight is going to be very, very helpful for you and give you some insight into the directions that you can go. What I'd like to do is get started a little bit first and just kind of introduce SCORE Cleveland to you and talk to you about SCORE in general. I don't know if anybody caught Channel 5 News tonight, but we were very lucky to have a little segment on there tonight that talked about SCORE. It was really a nice piece. So that said, our mission is really to foster vibrant small businesses in communities through mentoring and education. That's our main thing. That's what we're doing tonight. Mentoring, one-on-one mentoring is something that we do on a regular basis. We probably work with some 6,000 different clients in a given year. We want to make sure that every person has support that they need to become successful business owners. And that's, again, why we do some of these workshops that we're doing. You'll find out tonight that that's really going to be helpful for your success as you begin to understand what banks and lenders are looking for. So you all know that small businesses is probably a good 50% of the total economy of this country. And, anything that we can do to help small businesses is going to float up and help the country as well and help the economy of our individual communities. That's really important. Wanted to let you know, you probably already do, that SCORE is made up of all volunteers. We never charge for anything that we do. And we're the largest network of small business volunteers and mentors in the country. There are some 250 chapters around the country, of which we are one. And this year we are the top one. We have been named Chapter of the Year through SCORE on a national level. So we're very pleased to do that. And, we've got something for everybody. If you go to our website, there are resources for veteran entrepreneurs, for women entrepreneurs, for Hispanic entrepreneurs, and we work with many communities and Black entrepreneurs as well. So that's really important to us to be as diverse as we possibly can, both from the people that we serve, but the people who serve as volunteers as well. So we're here for you. We talk about being here for the life of your business. So if you're in a startup mode right now, you might be with us in the next 10, 15, even 20 years. When you go to exit your business, we are there to help you do that as well. So just to give you a little bit of stats on who we are and what we've done. In 2021, we started 227 brand new businesses. We created about 919 jobs, some of which would be the owners of the companies that got started. And our chapter provided almost 9,000 individual services. That means workshops, mentoring, and things like that, we were able to work with clients going forward. And our statistics show that anybody that's had 3 or more hours of mentoring reported higher revenue and actually increased business growth. So we've got a code of ethics. We do all we can to protect our clients and their privacy and their businesses. We're not allowed to invest in your business. We are not allowed to take part in your business, and we are not allowed to give you advice to go anywhere that is basically SCORE related. So that's just part of what we sign off on. We sign that code of ethics on an annual basis. And I mentioned before, all our services are free, and the reason is, in part, we are a service arm of the SBA, and the federal government funds about, I don't know, maybe 20-25% of our total needs. The rest we raise on our own to keep the business going. What I wanted to just do is show you our website. And if you go to cleveland.score.org, you can find a tab for finding a mentor. If I hit that tab, it's coming up on the wrong screen. So I am going to pull this over here, open this up, stop sharing for a second, and then reshare again. Make sure you have it. And now you should be looking at our live website. And what I wanted to show you, we're just finishing the Key for Women pitch contest. It was women-based entrepreneurs that are actually, we're going through the final applications now. And by the end of this month, we will pick the 10 finalists to actually present in person at Tri-C. But wanted you to see how to find a mentor. And, as you go through these workshops and you find that you need some help with your business, certainly go ahead and go to our website, go find a mentor. So if you just go ahead and click on find a mentor, and then in Northeast Ohio, put some basic information from us here, giving us, a description of what you're looking for. That's really important. And submit it. And once you do submit it, it goes to our client assignment team. Our client assignment team will find the best match of mentors to what it is that you're looking for. And then we will assign that person, contact you generally within about 48 hours. So feel free, please, to go ahead and request mentoring. So I am going to stop sharing this and go back to slides, which I just closed off. Give me 1 second and I'll pull that back up. And I believe that that's the wrong slide. Forgive me for the technical glitches today. And this is the right one. Let me share this. Are you seeing the welcome slide?
That looks like your main screen there.
Our mission, our values, the ones I just went through?
No, that looks like the shortcut on the main, your main computer screen.
Yeah, yeah. Okay, here we go. That should do it. Anyway, let me pull the screen back up. And
there we go.
Yep. All right, so now, without further ado, let me introduce to you Dave Javeski, who is CEO and President of Comstar Credit. And he's going to talk to you about Behind the Lending Curtain. Dave, just let me know whenever you're ready to switch slides.
All right, thank you. Well, I appreciate everyone carving out a little bit of time to talk this evening. I really love this series. My name is Dave Jazeski. I'm the CEO of Comstar Credit Union, and we've been around since 1938. We haven't been in business lending quite that long, but we service Lorain, Erie, Huron, Cuyahoga counties. And so appreciate you, like I said, taking time. Let me just tell you a little bit about how this all started. A long time ago, before I was in banking, I owned a small business and a really small business, really. It was just me and one other gentleman. And we were looking to expand and needed a small business loan. And I didn't really realize that, some excellent resources like SCORE were around, and, just went to a business banker and filled out an application and got a rejection and kind of took some lumps there. But the most interesting part of that process was kind of the lack of transparency as to what was being considered and why they needed certain documents and that kind of thing. So when I started to work with Comstar Credit Union and we got into the business lending, I decided that, I think it would be very good partnership to develop a series to talk to business owners about, what's behind that magic curtain at the financial institution. What exactly are they looking for? Why do you get the decisions you get? And some considerations for, mutually beneficial relationships and those kinds of things. So it's a really good fit as a not-for-profit financial institution to teach this course. So I appreciate the time. My commitment to you is that we will go through part one this evening, and then I will stay on as long as there are questions. So if you have a question, please put it in the chat, and we'll get to those either as we go or as we conclude. My contact information will be on the final slide if you want, a question comes to mind and you want to email me direct. So that's kind of where we're at. So I appreciate, and let's go on to the next slide. So one thing about this series is part two and part three kind of build on part one. And so, certain business owners will be on a little bit different path. One of the things that I really love about this industry is every single business and every single business loan request are unique in some way. It's very, very different than, hey, I want to buy a car. This is the car I want. These are my terms. Thank you. There's a ton of considerations. There's a ton of ability to make a loan request as unique for approval as possible. And so, first off, you should be congratulated on taking those steps to ownership. And to keep the ball rolling and to kind of grow your empire, you may need a loan to do that. And so there's a few considerations for that process and in preparation of submission of the loan request that I just would like to talk to you about this evening. So one of the things that I can't stress enough in these series is the banking relationship. So when you have a business, your personal bank or credit union or community financial institution might be great on for your consumer needs, but you really should consider the business banking side as a separate relationship that you need to make sure you have a good fit for. So there's basically three different relationships in banking. You have what I call kind of corporate retail banking on the for-profit side, which you have regional banks, Huntington Key, those type banks. And then you have community banks, which unfortunately are getting more and more sparse, which are a little bit more local leadership and local presence. But they're also some are on the for-profit and some are on the not-for-profit side in some aspects of their business. And then you have credit unions. And credit unions are cooperatives that are membership owned, and they are not-for-profit banking. So that's just kind of the basic structure. But the relationship between the business owner and the business banker, or whatever they call themselves, is very important to be as transparent as possible and to go into conversations knowing that these relationships are gonna matter in the long term. I mean, we were just talking a minute ago about how SCORE is here for your business for years and years, and your financial institution should kind of evolve the way your business evolves. So you want to make sure that you're talking to, you might want to set up some time to know what your business model is and talk to financial institutions to see if they understand or if they work with those kinds of business models. And so that relationship needs to start off well and needs to start off with what you think is a good fit, and then it'll go from there. So the very first part that most financial institutions are going to want to understand is just, did you put your name on it? What is your operating agreement? Is it you? Does your business exist in legal form with state of Ohio, tax IDs? Do you have the operating agreement will show, do you have partners? Do you have equal partners, minority partners, all those kinds of things? Who is allowed to make decisions for your business, whether it comes from loan requests, banking requests, those kinds of things? So that's a very important first step, because that's kind of where it all starts on that operating agreement. And then if you're at a point where you're ready for a loan request, what is the plan for the business? Everyone likes to wear rose-colored glasses. And of course, every once in a while, you do have those great businesses that take off, like Apple and Tesla and those kinds of things. But those are really the exceptions, and we hope everyone is that successful. But when we want to look at a plan, and I know that the mentors at SCORE have looked at good plans and bad plans and help people evolve those into better templates, is just be realistic and transparent with your business banker. SCORE and also the SBDCs, they will help you with packaging your plan. And that plan really is a very detailed narrative, and it should answer more questions than it creates. The other thing that we see in some business plans is this idea of break even. Now, do not be afraid to say that, hey, I think I might take a loss in the first year and the second year because of this, that, and the next thing. Being honest about what you think your projections are is very good in building transparent trust with your financial institution. Let me give you a good story. When I first became a business banker for the credit union, There was a loan request that came in from a borrower who was not a member. I didn't know their business. And they, gave me all the paperwork I needed, and we had very frank conversation about what they were trying to do. And they gave me a business plan that in years 2, 3, and part of 4 of the business plan, they planned on losing money. Now, that doesn't make their business plan financials look very good. But what I didn't realize is that that business owner knew that starting in the following year, they were going to be doing a road widening plan right in front of his business. And so because of that, he knew that his traffic and his business would be affected. So he was very honest with, hey, I've been operating my business for 20 plus years, but here's what's going to happen. And this is why. And that went a long way for a brand new relationship. Say, okay, it doesn't look great, but it's honest and it's transparent. And so let's continue to have that conversation. So when we're putting these business plans together to show financial institutions, just try and keep that relationship in mind. Okay, next slide. So what's love got to do with it? Other than being a great song, what lenders really like to see is they like to see that the business owners have some passion and some grasp for the success of the business. And success is determined sometimes by the owner. There isn't some outside standard that says, well, if I don't make $1 million, I'm not successful. It has to be within the grasp of your business and what you think is a success. So a few things to consider in this area. So when you're filing for LLC or S Corps or whatever type of entity, that may protect you from operational liability. There's a lot of reasons why businesses decide to file as certain entities, and I'm not here to tell you which way is the best to do it or those kinds of things. But just because of that facet of the business filing does not shelter you when it comes from standing behind your business loan request. So yes, in most instances, even though it is a business loan request, the ownership of that business are going to be asked to guarantee that loan. So if anyone has a 20% or greater ownership piece of the business, they're what most financial institutions would consider a principal. And we would ask them to be just as responsible for the loan repayment. We like to look at it as the business owner is going to put the first money in and take the last money out. So being personally responsible is just a facet of what the financial institution is going to ask to help them sleep a little bit better at night about the request, especially if the business is newer and let's say doesn't have much history with operating or is a complete startup, those kinds of things. So blanket UCC filings, the Universal Commercial Code filing, they can happen. And let's say, for example, you have business A and you're going to open business B. And both of those businesses run under some umbrella of some sort. So sometimes those UCC filings are done mostly to protect the financial institution's collateral position. And then they are what the borrower might consider at risk, depending on the performance of the loan. But they're basically, financial institutions are basically looking for asset protection when they say, hey, we're going to do a UCC filing. And lenders are not investors. This is a pretty popular kind of topic when I talk to some borrowers. We don't ask for you to pay us more than what you agreed if your business does better. If you want to, I'm sure financial institutions out there would do it, but so we are just a lender, not an investor. Another question that comes up is, if I have a personal guarantee, it's a business loan, will that report to the credit report? I think that's a very valid question to ask your business lender, because most instances, the personal guarantee, that payment, that loan payment will report. Another very common thing to talk about early is love paying your taxes. Now, nobody likes paying taxes. I get it. But there is a tax responsibility. So in the relationship, what we need to discuss as a financial institution is if you continue to offer a financial institution P&L statements, balance sheets, all those kinds of things, and tax returns, and they just show loss after loss after loss after loss. I understand depreciation. I understand paper losses. But at some point, you have to show that you're making income. Now, that means you're going to have a tax liability on that. I completely understand it. So later in the series, when we talk about debt service coverage and those kinds of things, the accountant that you deal with should also kind of be in this relationship that the financial institution should be able to have conversations with the business owner and them with their accounting people to understand what they have to show as income to be able to support a loan request. So, Ronald Reagan once said, trust but verify. So working with a lender or a loan packager, there's a great need for transparency. And especially the first time that we talk to a borrower, there's a great need for documentation. And look, we understand that business owners are busy, and a lot of times they don't have a huge staff to be able to do a lot of these things. Just be patient. The newer the relationship is, it'll seem like a hassle to get all this documentation. But typically, once you do that, as time goes by, it's not such a big request all up front. Now, the good news with technology is there's a lot of capability for applications and document exchanges electronically. So you're not bringing a phone book size set of documents. But just know that transparency and documentation are going to be important, especially in a new relationship. So the information has to be appropriate to the business loan type. So certain loans won't have certain appropriate information, such as appraisals if it's not a real estate loan and those kinds of things. So on the next slide, we're going to talk about kind of a lot of this stuff. Okay, so this is not even what I would consider a comprehensive list, but I'm just going to go through these boxes, kind of give you an idea of where you might start with a financial institution. First off, fully completed and signed loan application. Now, one of the things about a complete loan application is we don't typically put boxes on loan applications for no reason. They're giving us some kind of information. So if you just fill in the top and then sign it at the bottom and say, hey, here you go. The only thing that you're really doing is you're just extending the amount of time it's going to take to get you to an approval. So just take a few minutes and go through and make sure you've completed all the information. If you have questions about why, please just ask your financial institution. That should be part of that mutual benefit relationship. Also, fully completed and signed personal financial statement. Me personally, I don't care where your PFS comes from. I don't care if it's on a template from a bank. As long as the information is the same, I don't really care. There's a million PFS templates out there, and basically they all have the exact same information. So, there you have it. Current business P&L statements. Now, if you're a startup, you probably won't have those, but if you're not a startup, you should have those. 3 years business tax statements. What this is showing us is trends in the business. All right. And then also personal tax statements, because a lot of those things will intertwine when it comes to how people of the business are paid, those kinds of things. Any investment dollars that went in originally to the business, how do those match up? Now, if you're going to buy something, a piece of equipment, anything that is a signed purchase agreement or some type of um, other statement that's showing us, like this is the actual agreed price on those kinds of things. All those things are going to be very important to us to match up to the request. If you're in the real estate game, investment real estate, we want to see a current rent roll because that's going to show the financial institution a few things. One, how long has somebody been there? How long is their lease going to continue during the life of the loan? And also your occupancy rate. Now, we understand that things change and renters leave and those kinds of things. And so, most financial institutions have some formulas built in for that. Collateral description. The greatest example I ever have of this is I had a borrower call me on the phone. I talked to him a few times and he was telling me about this thing that he invented. Now, I didn't know anything about the semi-trucking business. I just don't. And he was trying to describe to me what these things were he was making in this machine that was making them. And that was going to be part of the collateral he needed to expand his operation. So literally one day he came in with this part that this machine was building. And when I saw it, I'm like, oh, okay, I get it. Now, I don't expect somebody to bring in a pizza oven. I kind of get the concept of that. But sometimes on the collateral description, you just have to be very, very, like to you, it might be, well, geez, how obvious is this? But to the financial institution, it may need to be very descriptive. So they kind of understand in pictures or drawings or those kinds of things. So signed lease agreements, similar to the rent rolls on the real estate side, to sign a lease agreement that you might have. So let's say, for example, your business went into a shopping center and they're going to build out your little empire in this little shopping center. So the financial institution will want to know, well, how long is the lease and what are the terms of that lease? How does that lease and the lease payment affect your current amount of debt that you currently have and how you're going to service any new debt? And then leasehold improvement construction contracts. Financial institutions get very frustrated when they look at leasehold improvement agreements and then the borrower comes back months later, 2 months later, 3 months later. Oh, we're over by 10% or we're over by these kinds of things. So we like to look at kind of those construction contracts. And then what you don't want to do is you don't want to kind of overspend in the middle of construction that's outside your loan request, where now all of a sudden, based on your application, you may not have the same affordability. So that's important. Proof of insurance. Now, it seems pretty obvious that the business should have insurance. One thing that's not obvious is on certain loan requests is there's a thing called a key person or key man life insurance. And what that is that protects the financial institution and also other parties if something were to happen to the owner or one of the principals of the business. So it's not even necessarily if something happened to the business or happened to a piece of equipment like you would consider traditional insurance. So when you get to your loan application, your financial institution should have that conversation about what kind of insurances you're going to need for that type of request. We touched a little bit on the accounting firm contact information. Good financial institutions, when you get to the end of the loan request, will actually ask you for a document that you sign, that you present to your accounting firm so that every year your tax returns and your financial statements, their accounting firm can just send them directly to the financial institution. So they don't have to bother you every year and say, hey, it's time for our annual review. When are you gonna have your tax returns done? When can we have this? When can we have that? They can kind of do that in the background and let you run your business. 4506Ts from the IRS. There's been a lot of chatter on the news about new IRS agents that are going to be getting hired. And all I will say is that the 4506T from the IRS, basically allows the financial institution to talk to the IRS, mostly digitally, and ask them to verify what you've submitted. So transparency and trust kind of go hand in hand, but typically a financial institution gets tax returns that are filled out in pencil. They're gonna ask the IRS to verify the tax return, and that 4506T is what is going to allow them to do that. Now, if you happen to be a non-for-profit, say, "Oh, we're a not-for-profit. I don't have to file taxes." Well, one thing that we may ask for is your 990. So if your not-for-profit has X amount of revenue, then you have an obligation to at least file this 990, and we'll ask for a copy of that. Proof of equity. We were talking about first money in. So equity is not, hey, if you approve this loan, my buddy is going to give me, $5,000 or what have you. Proof of equity is your money that you have now to put first money in. Okay. Proof of equity can also be on the real estate side. Hey, I'm going to buy $100,000 building, but the appraisal said it is worth 200,000. So that's a kind of equity also. So there will be some proof of one of those versions of equity. Tax returns of other owned entities. I don't have a more recent example than Enron, and maybe Enron is kind of going away into the fog of history, but because Enron was creating these shell companies and hiding all their losses in these other companies, financial institutions started looking at and asking for tax returns of other entities that you as a person may be a principal or have some interest in another business. Sorry. State of Ohio filings, we talked about that. Those are getting very easy to verify. You can almost go right online and print them, download them like instantly. So those are getting pretty easy for everybody. EIN and TIN filings, those are pretty easy to request. You should always have a copy of that anyway. And then bank statements. So sometimes if you have a newer business or you don't have, let's say you don't have your current tax return done, those kinds of things, we'll ask for bank statements. And what the bank statement does is it shows the financial institution the kind of money that's going in, coming out, all those kinds of things. It doesn't necessarily show all your debts, but it gives us an idea of how you're kind of managing cash flow and what your typical transaction rates are. Environmental questionnaires, these are very important. They're a lot of times, not a lot of times, but sometimes, unfortunately, we talk to people in the real estate side of business loan requests. And we always ask them for questionnaires. And then based on those questionnaires about what's going on in kind of environmental impact in what you're buying, you might hear things called phase ones, phase twos. You might be in an area where they have these things called brownfield funds for cleanup. Environmental questionnaires are very important, and this goes to mutual benefit. So one, it protects the lender. Two, it really protects the borrower, because if you didn't do some environmental due diligence and you go into chain of title of that property and some environmental issues from the past are found, you are on the hook. That's your responsibility. Okay. And typically there may be language in some loan documents that say that could be a default. So it's very important to get that information to the financial institution. And then debt schedules. Debt schedules, we're not trying to pry in, what you're buying with your credit cards or, those kinds of things. What we're trying to do is get a holistic view of, okay, you've got 4 kids living in the house. You're driving a new Ferrari. those kinds of things. How are those debts going to impact your ability to repay the loan? And then proof of current taxes. This is mostly on real estate, and just to make sure that you're current with your, if you had any tax encumbrances in the past where they may have liened property, those kinds of things. So we just want to make sure. And like I said, most of this is really going electronic. So it seems like kind of a lot of stuff, but like I said, in the very beginning of a relationship, these kinds of things are going to be gone over. All right, let's go to the next slide. Now, I want to talk a little bit about the SBA. The SBA is a fantastic resource for borrowers and for financial institutions. Oh, lost the slide. There we go. So if we go the SBA route, the SBA is not a lender. The SBA is a lending partner. And what the SBA allows financial institutions and borrowers do is bridge the gap between what may seem like low risk and what may seem like high risk. We're going to get into some illustrations and examples about those later in the series. But if we go the SBA route, which is a fantastic option for a lot of people, they ask for a lot of stuff too. So I just want to talk to you a little bit about what that looks like, because they do have a very electronic process now, which is way better than the process that we had when I first started doing processing SBA loans. But there are some very common things. For example, the borrower information form. There's a lot of questions on it. And what the SBA is trying to do is figure out if you're eligible for that type of program. So there's a borrower information form. There's a statement of personal history. Now I'll give you two stories on the statement of personal history. You got to remember the SBA is a government entity. Now, I had a borrower who wanted to go SBA. It was appropriate for them to go to SBA. But 15 years prior, they had made a poor decision and had a nonviolent felony. Now, the statement of personal history, you will have to disclose that. And then the SBA will review, and they look at a lot of different factors. How has this person performed in society since that unfortunate incident? Those kinds of things. How recent was it? I don't know what the SBA's checklist is for that, but I do know that that loan was approved, even though that there was a hiccup on that statement of personal history. Now, that's a good story. Unfortunately, I had another borrower, which they were rock solid. It was appropriate for them to go SBA. They had a business that they were buying from a gentleman that they worked for. The business was in business for quite a long time. They had really great financial statements, but they refused to fill out the statement of personal history because they felt like that was inappropriate or it was none of the government's business. And I respect both sides of that argument, but the SBA has a right to deny the guarantee. So just know that if you're considering the SBA route, that might be a bridge we have to cross. Documentation of status, non-conflict of interest statement from government employees, and also government employees' spouses. We dealt with a borrower whose wife worked for the FBI, and the FBI had to send us a letter saying that they understood that there was a loan request and that it wasn't any type of conflict of interest with them. And so that loan was approved. It took a little bit longer, but it wasn't really that much of a factor. Determination of eligibility. So there are some interesting eligibilities and denials of eligibility based on the type of business. So let me give you an example. I'm not sure how many of them still operate, but there is a business that's called Curves, right? It's a franchise. It's a It's kind of a women's station to station workout facility. Well, the SBA had determined that because Curves was only inclusive of women and they weren't inclusive of everyone because their business model was this is for women or whatever, that's not an eligible franchise and an eligible loan request for SBA. So there are some eligibility requirements. Business valuation by a third party. So if you're buying a business and you need the SBA's help, and the borrower and the financial institution does too, one of the things they're going to ask for is a simple question. Why do you think the business is worth what you're paying for it? And typically they're not going to look at your business plan because you wrote it. Typically they'll look at a third party and say, okay, tell me why. Well, and some of those third parties are accounting firms where they look at the business and say, well, you've got these factors and these clients and these receivables and this real estate and this is the value and so you're that kind of thing. So franchise documents, there is a franchise registry process, and the SBA has a list of what they call SBA approved franchises. And I've actually seen the SBA send language to the franchise holder to put in their franchise documents that would satisfy the SBA's loan approval process. Machinery and equipment inventory with cost quotes, that's really not too much different than a standard loan. Copies of notes for refinance scenarios. Lien filings, sometimes the SBA will say, and the financial institution will say, well, we're gonna do a lien filing as protection for the guarantee against your home. And some people are averse to that, and some people understand that, and so that's something that SBA route may include. Proof of equity, very similar. They just want to make sure that there are loan fees. Now the loan fees change from time to time. Sometimes, depending on the size of the loan, there won't be a guarantee fee. Sometimes there is. That can change, but they just want to make sure that kind of proof of equity is on deposit. And then other supporting documents not identified elsewhere. I got to be honest with you. I'm not really sure why I put that in this slide, other than it's in quotes. So I'm sure I've seen it on an SBA form before, where they ask for supporting documents out of the blue. So it's kind of like that old tag where they say, well, what's your job description? And they say, oh, and other duties as assigned. It's kind of one of those things. And the lender's credit memo. The most important piece of the SBA journey is that if the financial institution would not do it, neither would the SBA. But if the financial institution would do the loan with the SBA guarantee, that has to be spelled out in the lender's credit memo. Because what the financial institution is basically saying is, hey, I think this is a good loan, but it has this shortfall. But because of the SBA guarantee structure to the financial institution, we would do this loan because that will take up that shortfall. We're going to discuss that a little bit later in the series, but just know that you might fill out loan applications. The financial institution might say, look, for the mutual benefit of the financial institution and the borrower, I think we need to look at the SBA guarantee program. And so don't be discouraged. Yes, it's a little bit more paperwork, especially because you're dealing with the government. But if it helps to get you to yes, then just know that this may be the road we have to go down. Okay. Now, I know everyone, well, okay, not everyone. I know a lot of people are tired of Zoom meetings. I am a big proponent of face-to-face meetings with business owners, potential business banking relationships. And prior, that's kind of all there was. Now, technology is now like, hey, we can schedule this, we can schedule that. Sometimes when I get a loan application packet in or my team looks at it, we want to talk to the borrower and just kind of go through where we're at once the loan application is looked at. What documentation, do I not understand something that's on your documentation? Do I not understand the comprehensiveness of your business plan or the story? And you may have already met with SCORE on one or more occasions, kind of preparing this submission. Now, with the electronic era, a lot of these submissions are not are streamlined, and there's portals and upload documents and all those kinds of things. And what I like about that is it lets the business owner run their business. But at some point, I am not as comfortable personally in a business relationship where I've never met the person personally, or I've gone to where the loan request is, or I've gone to their office, or they've come to one of the closest branches and we just had a conversation or a cup of coffee, those kinds of things. So, suggest a meeting at the site of the request. A lot of times, it's very, I'm kind of a visual learner that way. I like to kind of see what's around your request, and yeah, I can Google Maps and all that kind of thing, but that doesn't necessarily show me. So sometimes I just like to meet the borrower and say, hey, let's meet where we're talking about this request, or in the vicinity of those kinds of things. Now, there are a lot of financial institutions that are extremely competitive in the business lending game. But what I will warn you is that cursory pre-approvals are not commitments. So there is a formal process of making an offer for a business loan and the borrower and the financial institution executing a commitment. It's a document. Now, if you send in a loan application somewhere online or somewhere in the ether or to a financial institution, and they say, hey, got your applications, I would give you a pre-approval of X. Okay, that is literally what it is. It's just a pre-approval. If they haven't looked at all those documents that we've talked about in the last couple slides, that is not a commitment letter. The commitment letter spells out exactly what the loan approval will look like. So I just caution. There's financial institutions that I think everyone's trying to do business, and I don't begrudge them that. But what I don't like to do is I don't like to get into situations where I'm doling out pre-approvals and then I'm demanding way more documents than what is pre-approved, and then going into a denial. So that's just not the style that some financial institutions like ours go down. Some people like it the other way. Rock on, but just know that there is a formal difference between a pre-approval and a commitment letter. Okay. Next slide. So, what is the financial institution doing with all that stuff? One thing that you have to know is that your business banker is kind of should be your cheerleader of sorts. Okay. But the stool of business lending has at least 3 legs. So there's a loan officer, business banker, business development, whatever they want to put in a name tag. Just understand I'm kind of talking about the same person. So they are doing a lot of this up front. And then that financial institution will actually have a business loan committee, a member business loan committee. And there are certain branch managers and certain banks that have certain limits, and they might say, well, okay, over a certain or under a certain limit, you can do approvals. Over a certain limit, you have to bring that to the committee. Okay. So now the committee will basically hear the case from your business banker. All right. And then they might say, oh, yeah, I think there's a deal there. Okay. Or I think you need to go back to the borrower and ask these questions. So there's kind of this intermediary. And then the last leg of that stool is underwriting. And we're going to talk about underwriting in quite a lot of depth later in the series. But underwriting is kind of this disinterested third party. they don't want to be emotionally involved in the entrepreneurship of your business loan. They are strictly looking at kind of risk analysis. So just know that these three pieces all play a part, and they have their own functions. And sometimes this is where loan requests kind of slow down. And then the business loan officer then prepares this loan for like a presentation almost. They go through the C's of the credit, which we're going to go into later. They talk about mutually beneficial structures. So what they say is what's good for the borrower. This is what the borrower wants. This is what the best case scenario is for the borrower. Now, this is what the financial institution needs. This is the best case scenario for the financial institution. And typically, business loan terms and agreements meet in the middle of that. And then there's a thing called the risk rating defense. So one of the frustrating parts about business lending is every financial institution kind of has a different scoring matrix. Some of them score loans from 1 to 10, and some of them from 2 to 8, good, bad, worse, those kinds of things. But your loan officer has to be able to take this loan presentation and your application and defend what they think the risk rating is going to be. Now, underwriting may look at it different. The MBL committee may look at it different. So you want to make sure that your documentation is as comprehensive as possible and that your loan officer has the clearest view of what you're trying to accomplish so that they can make those defense arguments. We'll go into more of that later in the series. So I know I've thrown a ton of information in this past hour at you, and maybe you're in a different place in this journey. And I hope that you join us for part 2 and part 3 as we kind of continue to get behind the curtain and go deeper and deeper into what financial institutions are looking at and evaluating, and how to get to an approval as much as possible. So next time, we're going to talk about the loan presentation itself, how to mitigate risk. We'll talk more about SBA, and then we're going to talk a little bit about how the committee has discussions about loan requests and what happens if they vote yes, what happens if they vote no. So that is going to be part 2, and I hope that I see you, or virtually, for part 2 next week, same date, same time. And at this point, I'll answer any questions that you have.
So Dave, I set up everybody so that they are allowed to talk. All you have to do is unmute yourself and feel free to ask a question, or if you don't want to ask it directly, either put it into the chat or in the Q&A box. But so anybody want to step up? Quiet.
All right. Well, a lot of times I'll wake up in the middle of the night and be like, oh, I had this question. So you have my email address. Please email. If I don't answer you directly, someone from my team, my commitment to you is that they will. So thank you again.
Thanks, everybody, for joining us, and look forward to seeing you next week on this second part of the series. Thanks so much. Take care now.
Thank you.
Bye-bye. Thanks, Dave.